Okay. So chapter 5 talks about inventory. So let's just say, what kind of products do y'all want to use? Shoes? Shoes are good. Earrings? No
Shoes
earrings.
work for me.
They use
Let's do
bicycles.
shoes. Guys and girls both alike like shoes, right? Who doesn't like shoes? So let's talk about, we have a store and we have shoes. So we have inventory. We're going to keep a bunch of shoes on hand. And there's different ways we can track the use of that inventory. Like when we're selling it, we want to know how we're going to keep track of the cost. Are we going to say, okay, so each one of these shoes specifically, we want to know what the cost was on that specific shoe, and we're going to use that method. You probably won't if you're selling something like shoes. I can tell you at the car dealership, that's how they do it. It's specific, right? Because each car is different. And if you get packages on that car, they maybe have a sunroof, they have some pinstripe, they have bigger tires. Well, all of those costs are going to go into that specific car, right? So it's a bigger item and it's easy to keep track because you have some things that are specific for that car. So when you sell it, you want to know specifically what is the cost of this car, right? Well, if I'm selling shoes, I may not want to use that method. So there's other methods to do. I can keep track of it using something called LIFO, which is last in, first out. So the last thing that I bought is going to be the first thing that goes out. The last thing I purchased from my inventory is going to be the first thing that goes out. I have FIFO, which is first in, first out. So whatever I bought in the beginning of that period of time is what I'm going to sell first. I'm going to get rid of that old stock first. That is a good method for inventory when you're selling something like audio visual, because projectors and electronics, they seem to upgrade real quick. So you don't want to get stuck with that old stuff, right? You want to make sure you sell the old first and scoot that stuff out of inventory. So there's different reasons why you might use different methods. Then you have average costs. So for the shoes, that might be great, do an average cost. They're all kind of similar. They all have the, around the same amount of price. When I purchased them, depending, maybe I got a good deal. And so I got a bunch of shoes for $10 on this particular order because they had a sale. Maybe they had a whole bunch of products of one particular type of shoe and I got a great deal on it. So I bought those for 10, but the next batch that comes in, I'm paying $12, $13 for. Well, I might want to average it out and not have a bunch go through at a lower price. It just depends on what your business is. So you have these different methods. So that's 4 methods we talked about: LIFO, FIFO, average cost, and then specific. So those are the types of things you're going to have on the homework. You're going to walk through that. The other thing that you have is different methods of keeping track of when things are going in and out. So we have something called periodic. I may have a bunch of transactions through the month of purchases and sales and purchases and sales. And I'm just going to look at the end of the period, how many did I sell? What was those costs? Do an average on them. How many did I sell? Do an average on them. And I'm going to keep track of it that way, which is called periodic. So this chapter talks about periodic, and it also talks in the appendix about perpetual. I like the perpetual method better. It's a little bit harder to keep track, but that's the method that I like to use. So I give both in the problems, and I give both on the test. So you have to know how to do both methods. The perpetual method means that I'm constantly updating every time I make a sale or when I make a purchase. So when I have, let's say I have, 1,000 shoes on stock and I sell 500 of them. Well, when I make the sale, I'm gonna look to see what the average is of those 1,000 shoes at the time that I sell. And that's what I'm gonna use for the 500. Then I turn around and I make a purchase for another 500 that costs something different. Now I have 1,000 in stock and I sell 500 again. Well, I'm gonna take the average again And then that average cost is going to be different than the first 500. And I'm going to do it that way. Where the periodic, I'm going to say, oh, okay, I had 1,000 shoes that I sold. I had 1,000 shoes I bought. I'm going to do the average at the end. Does that make sense? One I'm doing as I go. One I'm doing at that period end. Okay, so that's the two different methods. There's an example in the homework on one of the problems, and I just kind of wanted to go over this again. Whenever they're asking you to add in those costs of the product, if it says FOB shipping point, you want to make sure to add those costs into the cost of the shoes. So maybe I bought a bunch of shoes and then I had shipping on top of that. I need to know if I need to add that shipping in or not. So keep that in mind. So I wanted to look at the homework because let me see if I can get that screen over. I'm going to try to do it this way. I'm going to bring up the homework and look at one on the screen and see if this is helpful when we talk about it. So let's look at number 3. Was it? No, that's not the right one. This is not the right homework.
That's chapter 3.
I'm not in chapter 3. I'm in chapter 5.
5, yeah.
Oh, we can look at chapter 5, number 3. That was a perfect one to look at.
Yeah, we can look at that one. All right, so number 3. All right, did I put a note? Let's see if I have a note. It's periodic, which means we're going to be looking at this at the end of the period. We're not going to be looking at it as it goes. Okay, so they tell us that we have Laker Company. They reported the following January purchases and sales, and they give us all the data. Okay, they want you to use the periodic inventory system, and we're going to do specific, weighted average, FIFO, and LIFO. So it's all 4 methods to use. All right, so they're saying, okay, what is your beginning inventory? Well, that should be simple. We're going to go up here and see on the chart. It tells us we had 235 units at $16, and we get a total cost of $37.60. So your numbers may be a little different because I think they change, which, you know, when they come up, they change. Same problem, but different numbers. So if you can look at this one and figure out how to calculate it, you should be able to go back and get yours done. Okay, so I'm just filling in the boxes. So I don't know if it's going to let me write. Let me see. No, it won't let me write on the screen. Sometimes some of the softwares will let me write, but this one won't. Okay, so we're looking at beginning inventory, 235, 16, and there's my cost. Now, I'm looking at what I purchased. What did I purchase for that month? I had 2 purchases. And so up here, you can see January 10th, I had some sales. I had some purchases on the 20th and on the 30th. So I'm just going to fill those in. I'm filling in the information they gave me. Got my $15 for the purchase of the 180. And then my purchase of 390 units, I have $14.50, total it out. So it tells me what's available, $12,115. Okay, so now when I'm looking at what was sold, I'm going up to the top to see, okay, what did I sell? I sold 200 units. Let me see, I'm gonna go over to, where's my sale? Oh, it's not looking for sale. It just wants available. Okay, so it's saying I have 250 units. Well, wait, that doesn't seem right. Am I looking at this wrong?
Well, no, you're looking at it right, but if you read the instructions right above it, it tells you how many you sold or was remaining in that certain amount of time.
Oh, okay, okay. So I have 235 I'm starting with, and then I'm going over. Ending inventory consists of 415 units, where 390 were the 35 were from January 20th and 20. Okay, it's giving me specifically what was left from those. So it's telling me, okay, out of this batch, I had 215 units that I sold based on the information that it gave me. And
Yeah, you sold 20 from your beginning inventory
Yes.
according to.
yeah,
No. It's
According to what
not
it's
sold
telling me?
20. That 20 remain.
that's what's remaining because you
Yeah.
sold so many out of that 235. Is that what it's saying? Ending
Yeah,
inventory consists of 415. 390 units are from January 30th purchase, 5 are from the 20th purchase, and 20 is from the beginning purchase. So since they're telling us what's left in the end, then I know how many I sold out of each one of the batches.
that's right.
Yeah,
Yes.
so you have to subtract it,
Yeah,
and that's how you get your 215.
got it. Okay, so we're taking the 235 that we had. We're taking 215 that we sold because we had 30 left, right? Is that what it was telling me? 20 left? We had 20 left. So we have 215 at $16. Does it calculate it for you when it goes into the table?
Yeah.
Yes.
Okay,
Yes.
good. All right, then it's showing me my ending inventory of 20, which is 16, and it's a total of $320. So in the periodic, I'm looking at the end result, right? And then I'm back, I'm saying, okay, this is what I have left. And so then it doesn't matter when it went in and out. All right, on the 20th, I made my purchase. So now I know from the information they gave me how many I had left in inventory. So the difference is what I had that I sold. So I sold 175 out of that batch. $15, $26.25. I had 5 left at the $15 for $75. And then my 390 batch, I have 390, let's see, it tells me we're 390 were from January purchase. So all of them are still left. I didn't sell any of those. Let me go back up to the front, which makes sense because there was no sales on that same day, right? We can't sell it if we never had it. So that makes sense on why they did it that way. Okay, so the table's just breaking it down and showing you, okay, let's look and see how to find the cost of goods that were sold. So when you go to pull this over, like if I said, what is the cost of goods sold? You'll have to know how to do this work in order to get to that. And I can't remember, I'll have to look and see how the problems are like from the test bank. If they have a table like this to be able to do on the exam, I can't remember. I'll have to look. I'll tell you the format that it's going to be in before we have that test. So
I had trouble with number 13, where it asked you to, I guess, do this without the table.
okay, so let me see, did I have 13 on the list?
Mm-hmm.
I had
You had it on the.
We'll get to it. We'll get to it.
I have the same problem with number 13.
Okay, we'll look at it. Okay, so here's my weighted average. So a little bit easier, right? Because I'm just going to take the average. So I have my units that I had to begin with. I have my purchases that I had. It gives me what's available. And then from there, I look to see, well, what do I have left? How many did I sell? So you sold the 200 and 190. So you sold 390 units according to this information they gave you. So I'm just taking the average and saying, okay, let me just look at this. How many units did I have total? What I started with, what did I purchase? So I had 805. And out of that 805, what is my total cost? 12,115. So you're just finding the average from that information. And that's what you're left with for your cost per unit. Does that make sense? You're just basically taking the $12,115 and divided among 805 units.
Mm-hmm.
Okay, so now that's the 1505, and that then you sold 415, and they tell you your ending balance was 390
Mm-hmm.
for your sales. So now I know my cost because it's 390 times that average. And then same thing for your ending, you just take your 415 by your average, and that's going to be your ending inventory. So when you're looking at this, you'll have to know how to do this in order to do a journal entry maybe. And you have to figure out what is the cost to be able to do the journal entry for your cost of goods sold. What is your ending inventory? So you know what's left on your balance sheet. All right, so let's look at FIFO. First in, first out. So we know when we have 235 units, we're selling 200 on the 10th, and we're selling 190 on the 25th. Out of those 390 units, we're going to use what was first.
The beginning entry,
So the 235.
yeah.
So because we're looking at the end of the period, we're not looking at it. Perpetual will be different. Perpetual, we'll be looking at, okay, I have 235 units, 200 was sold. I know at this point, I'm going to go ahead and do an entry and know that 200 units were costed at $16 because that's what I had at the time. I didn't have that next purchase. So I'm going to use 200 out of the first ones. But with this, you're going to use the whole 235 because we're looking at it at the end of the period. Does that make sense?
Yeah.
No, I don't get it.
Okay, so because we're doing periodic method, we're going to look at the end of the period. So in the information that it gives us, in this table right here, can you see my mouse?
Mm-hmm.
This 390 units is what was sold. So since the 390 was sold, I know out of the 805, I'm going to pull the first 235. So it doesn't matter when the sales happen and the purchase happened. I just know at the end, I sold 390. Well, I can't have it all costed at 16 because I didn't have 390 at 16, right? I only had 235. So I'm going to take those first. So here's the 235. I'm pulling them all out because those were the first in. So I got to pull those out first. So
Okay.
235 times the 16 gives me my price. Then I need to figure out what did I have left. So just take the 390 minus the 235. So I have 155 units left. Now that comes out of the next
Second
batch.
batch.
Yeah. So we have the 180. We have, let me see where the 155 is coming from. So is that the difference with 390? I didn't do the math.
Yes,
on it.
yes.
Yeah, so the 155 is coming out of the 15 because that's the next batch that I bought. I bought 180, and out of that 180, I have 155. Now, if you would have only bought 150 at that point, then you would have 150, and then the last 5 would come out of that last batch. Does that make sense?
That makes perfect sense. I got it.
Okay. Then LIFO, you're doing the opposite. So since we're periodically, we're looking at the same thing. So we're looking at the periodic, which is 390. 390 units sold. Well, where am I starting?
The last one,
The last one. So how many did I have in the last one?
390.
390. So I can take all of them. So I'm taking that 390 from the last batch. Now, if I only bought 300, then I would say, okay, 300, I'm going to use all those. And then where am I going to next? I'm going to the January
Second batch.
20th. The 20th. It would be out of that 180. If I didn't have enough in that last batch, I would go to the next up. So then I'm left with, you know, whatever I had in the beginning, that's what I'm left with on my books. So I have 180, plus I still have that original 235. I think the next one was number 4. Perpetual. So I think it's the same type of problem, but we're doing perpetual. So now it's not going to be as easy. I'm not just looking at the end. The dates are going to be important. Okay, so here's all the information, same table. They're telling you that you're using the perpetual. Specific, they have to give you the information because it's specific. So with this one, it's kind of the same thing. You know which ones you have left, so you know which ones you sold. So that's kind of the same. For, I think this is average. Let me see. Determine the cost assigned to ending inventory using weighted average. Okay. So the weighted average on this one is going to be a little different than the other problem. So on January 1st, we have the beginning inventory of 160 units at 850. So here it is on my table. So the next part is January 10th. It tells me I sold 120 on January 10th. So what do I want to do? I have to record it now because I'm using perpetual. So we're going to do it as we go. All right, so I have 120 units that I'm selling. Well, I only have that one batch, that 160. So I know what my cost is going to be. It's going to be 850. Then I have 40 left. So now when I go on January 20th and make a purchase, I have a new purchase of 100 units at 750. So you're going to key that in your table. So now I got to figure out the average of the 40 at 850 and the 100 at 750. So what is my total? I have 140 units. You on your table, you're working it out for each one, right? So you know I have $340 on 40 and I have $750 for the 100 that I just purchased. So the total is 1090. Well, I'm just going to take that 1090 and divide it by that 140 to know what my average is. So right now I have 140 units with an average price of $779 per unit. You with me?
Mm-hmm.
Okay. Now when I make a sale, I want to make sure I use that number. It's not going to be, you know, the average from the beginning. It's going to be that number because I'm doing perpetual. So my next transaction says that I sell 120 units. So I have my 120 units in my cost that I'm selling. At what price? The average that I just figured out, the 779. Then I'm left with 20 units with that average. And that's what I end with. Now I have another purchase. So at the end of the month, on January 30th, I purchased 220 units at $7 a piece. So now I have the 20 and I have the 200. I add them together. So I get my total cost of the $1695.80, divide it by the 240, and I get 707. So now my next sale, let's say, is 200. I sell 200 units. What's my cost going to be for that 200 units that I sell?
The 707.
The 707.
Well, I have a question. When you went from you had the 20 units left over at 777. Did you average out the 155.80 divided by 20 to get the the inventory of 220 for $7?
Yeah, so it comes from the previous transaction. So if you look at that total, they're showing you, okay, I figured out the average for the 140 units that I had at that time, and it was 779. So I know I had 20 left over at that average price. So you just use that last piece of information. You take the 20 with the 779, and then you add in your purchase. So that's why you're adding the 20 plus the 220. And it was 779 plus the 7. You see that? On this bottom part down here.
Well, yeah, I see that part. I guess I'm trying to see, how do you get the 220 at $7? Was that where you
That was
averaged?
what you purchased. Yeah, that was given to us. So up here, it tells us that it was 220 at $7 a piece.
Okay.
Yeah. So you're just putting that information in there. So now that's not all you have though. You have those 20 units with 779. So you want to make sure that you add them together, add the two costs together and add your units together and then divide so you can get your cost per unit.
Okay. I kind of got confused because on question 13, it was asking, I mean, I got all of them right, but when it came to the weighted average, I kept getting it wrong, but I realized I was doing it the periodic way instead of the perpetual way. So I
yeah.
kept getting the answer wrong. But
It-
even when I tried to do it the perpetual way, I still wasn't getting how it was
How to
being
do it.
done.
Well,
Yeah.
we're gonna look at 13. Okay, so this method is first in, first out. So let's walk through that. So we had 160 units. We started with at 850. We sell 120. Well, I know that I only have 160, right? So I'm selling those. So it's $8.50. I have 40 left over at 850. Then I purchase 100 at 750. So now I have the 40 at 850 and I have the 100 units at 750. So when I sell the next transaction on the 25th, I'm selling 120 units. So I got to go, I'm doing FIFO. So I got to go back to the beginning, like my first ones that were in. How many did I have left from after that initial sale? I only had 40 left, right? So yeah, I had 40 left. So the 40, I'm going to use those first. So I have 40 at 850, and then I just take the 120 minus 40, and I have 80 more units that I sold. So the 80 is going to go at the next batch, which was the 100 at 750. So that's how I figure out my cost. Does that make sense? Does that make sense on the on how we broke that out and came up with the price per unit for the cost?
So the next one would be basically the reverse of that.
Which one?
Yeah.
Yeah, the last end. Yes.
LIFO. Yeah.
Yeah. So I have 20 units left after I sold. So I had 140. I sold 120. So now I'm left with 20 in that last batch, which was 750. So I purchased 220 at $7. So the last part says, let's see, you have 120 units that were sold. Oh, I already did that. Okay, we're good. I already did that. So when we make the purchase, so now in the end, I have 20 left from that purchase I made on January 20th, and I have the whole batch left from January 30th, which is 220. We're going to do the reverse of that for LIFO. So again, when we first start, we have the 120. We're going to sell 100 and 20 of them. So it's same. That's the same so far because it's the only part we had. We only had the beginning inventory. So I have 40 of them left over. Then I make a purchase of 100. So now I have my 100 at 750. Then when I make my sale on the January 25th, when I sell that 120, well, am I going back to the beginning first? No, I'm doing last. What was the last purchase? The 100. So I know that I'm pulling those 100 at 750. The remaining 20 are going to come from the batch before it. Y'all got it? So in the end, I have 20 units now at 850, and then I make another purchase. 220 units at 7. So I'm left with 20 from the 850 batch, and I have 220 from a new batch of 7. So it's a little more detailed because you're keeping track of it as you go. But I like that method. Okay. So let's look at 13. Okay, so we're doing perpetual. It's got your information on your table. It's want you to compute the cost of goods available for sale, the number of units available for sale, the number of units in ending inventory, and it wants you to do all 4 methods to compute the cost, and it gives you your information for specific. Are y'all having any problems with specific? I think that's pretty easy, right?
Yeah, that's the easiest one.
Yeah, because they're telling you what's left, so you can figure out, just deduct to come up with your available from each batch. And just add them together. That's how you come up with the available. Okay, compute the number of units in ending inventory. Let's see. So we have, let's see. So we had 1720 and we sold 1340. So that's where the 380 is coming from. Y'all shouldn't have had any problems with that, right?
No.
Okay. So now they want us to do the cost for FIFO, LIFO, weighted average, and specific. So on the specific, we've already calculated what we had available to sell. We calculated out what we had in inventory, so we know we sold 1340. All right, so when I do FIFO, I'm gonna have to go back and look at this. So we're not doing a table like we did on the last problem. You have to do the table yourself to figure it out. So I'm wondering if there's a way to, because it won't let me write on the screen. So let's see. Oh, maybe it shows me down here. Let's see. So I have my table with the 6. Okay. So it shows 680 at 40. So here's my beginning, 680 at 40. On February 10th, we made a purchase of 320 units at $35. So down here, we can look and see February 20th, we made a purchase of $35. Then, let's see, the next one is 100 at 23. So there's my 100 at 23. 21st is a purchase. The 5th is a purchase. Okay, so it's looking at all of the purchases plus what we had in the beginning. So it's calculating out what's available that I have in total for the month. What do I have available to use to sell? So I have 1,700 units, 1,720 units with a total cost of $66,640. So it's basically just calculating out everything for you right there. So you have to figure that out before you can figure out, let's see, what's the cost of ending inventory. So now we have to figure out what was the cost of what we sold in order to figure out what we have for our ending inventory. Or we can look at what did we sell and what, you know, depending on the method, how do we figure out what the ending inventory is? So you can do it two different ways. You can figure out everything that was sold and what the cost of sold was and then just deduct, or you can look at it from the end point, like what do I have left, and kind of work your way from there. You can do it two different ways. Okay. Let's look at, so this must be number 3. All right, so FIFO. So we got our table. We're going to break everything down, and we're going to break it down by date because it's perpetual. So when you're figuring it out, you know that you have several purchases that happened before you had a sale. So you're going to do your purchases, and then on that 3/15 date, it tells us we sold 720 units. All right, so for FIFO, where we're going? We're going back to the beginning.
First in, first out.
Yes, first in, first out. So we want to use those 680 units first. So that's why you got your 680 at 40, because you're going back to the beginning. Then I want to deduct how many out of the batch that I sold came from the first and see what I have left. So you have 40 left, and you're going to go to the next batch. It's 40 at the $35. Then you calculate it out. Okay, I'm trying to figure out what they're doing over here on the end. So we got the 680. And then we purchase these. We purchased these. So we got the 320 at 35. We got the 100 at 20.
It asks for the inventory balance. So whatever we have this number, we subtract with the whole inventory.
Yeah. Yeah, so, well, you got to go through and make sure that you get the right units. So there, this right here is kind of walking through the dates and giving you the information. So it's helpful on showing how it's figuring out everything. But okay, so my units, my 680 units are gone, and the 40 units comes out of the 320. So now I have 280 left out of that batch. So here's my 280 right here, the 280 at $35. That's what I have left. I made a purchase of 130. So I have those. I have the 100 at the $23. Right?
Yeah.
Am I looking at that right? Okay. All right, good. All right. So then I make another purchase of 490. So now I have my 280 units at the 100, the 130 that I just bought, and then the brand new 490. So when I make my sale on September 10th, I'm selling the 620 units. So now I'm going to go back to the beginning. I'm going to get rid of those 280 that I had. These have to go first, then the 100, then the 130, and then take the difference. So you sold 380, can't remember now, 620 units. So you sold 620, so just take your 620 minus your 280 minus your 100 minus your 130, and you're left with 110. So 110 out of that last 490 batch. Okay, so what am I left with? I sold the 110 out of the 490, so my difference is what, 380 units, which is what we calculated that we had left in inventory. So that's correct. And I'm going to use that last number, the $41. So for FIFO.
So I have a question. You couldn't do it to where you just took the number of
what was left?
Or the inventory that was sold, and then kind of like the 1,000 whatever, and just did it all the way down instead of doing it the 720 first and then the 6 whatever?
You have to figure it out as you go because of perpetual, but you
Okay.
can back into it. So since you know you're using first in, first out, and you know that your ending, they want to know, they're looking for your ending inventory. So you know, okay, I have 380 units left in the end. If I'm using FIFO, I know that I'm selling all that beginning stuff. So when I'm trying to figure the ending inventory, just back into that last batch. Because you know that that's what you're going to have left.
Inventory is 380, then I would just automatically take it from the $41.
Yep.
Okay.
Because you know that you sold everything that was in first. And so that's an easier way to do it other than what they did. They walked through trying to figure out everything that was available and when it happened, and it's doing it by date, just to show you how it works.
Okay.
But once you understand it, you can back into it, right? You have 390 units. I mean, yeah, is that what it was? 380 units. So you have 380 units left. You know you sold all your first stuff. Well, then you just go on right to that last batch. So you know that you have 380 units at $41. That's how you get your ending inventory. You just multiply it out. So that's all they were looking for there. With LIFO, do the opposite. So you know you have 390. So now I'm looking to see, okay, out of the 390 for LIFO, it's going to go back to that beginning batch because I'm taking everything out that came in last. That's what I'm selling. So my ending inventory is going to be that very first one that I had in the beginning, right? So it's 390 out of that original 680. So now I know that my 380 times 40 is going to be my cost. Does that make sense?
Yeah.
Okay. And the weighted average, I'm gonna have to figure out the weighted average along the way. And that's what they're showing you here. You won't have this.
I got confused at the way it was showing how it explained it.
Yeah, and maybe it explains it using the same table that I'm showing you. So it's showing you by walking through the entire process. It's showing you by laying the dates out and what's happening at that time. Where are you pulling from at that time? So let's see, this one, let me see if this looks like it's helping any. I don't know, this is just kind of breaking out everything that was sold and just looking at the units based on what we had and when we purchased. and
That's the
coming up with
first
that
in,
end
first
bin.
out one though.
Yeah, and then the LIFO is the same. I think it's gonna have that same pattern. So yeah, see, it's kind of working backwards.
Okay. Yeah, so when it showed C, the weighted average, I couldn't understand what it was doing.
Okay, that's because you gotta figure the average as you go. So there's
No, I
no other
got
way
it.
to get out of, you can't get out of it. You gotta figure it out as you go. So you start with 680 and then you buy 320. Well, now you're stuck having to figure out what is the average of all of those. So you got to add the 680 plus the 320 to come up with that average cost of 3840. So it's let me bring the calculator over. So you're going to have 680 times the 40 units. That's your 27.2, which shows you in this top line. Then you purchase the 320 at 35. So we have 320 at 35, which they're telling you when you calculate it out as 11.2. So I'm going to add that. So now my total cost is 38,400 for the 680 plus the 320
1,000.
gives me 1,000 units. Well, I want to figure out what is my cost. I take the 38.4 divided by the 1,000 units, 38.40 per unit. So that's what I have to use as my cost when I sell, if I don't buy anything else. In this case, we bought 100 more. So now we have 100 at 23, which is an additional $2,300. So I have my 38.4 plus the 2,300, and that's where the 40,700 comes from. So now I have the 1,000 plus the 100. It's 1,100, right? So it's going to be the let's see, 40,700 divided by the 1,100. So that's my $37. That's my average. Now when I sell on 315, I have to use that number, not the $38. I have to use the 37 because I bought more before I sold it. So I had to redo my average. So now when I sell on 315, I'm going to have an average cost of $37. Does that make sense?
Yes.
Okay, so once I sell those 720 units at 37, now what do I have left? Well, I had 1,100 units, right? And I sold 720 of them. So now I got 380 left. But I purchased 130 at 45. So now I got the 380 at 37 plus the 130 at 45, which gives me the 19,910 new average. So if I sell, I'm going to use that number. But I don't sell, I buy again. So I'm buying 490 at 41. So now I have the 380 at 37, the 130 at 45, which gave me my 19,910. So my average of 3904. Now I'm adding the new purchase. So now I'm ending up with 40,000. And now my units are 870. right? So 40,000, let me just make sure it's right, divided by
That
870.
look like 1,000 again.
Oh, it's 1,000 again. So wait, so I had, how many did I have here? I had
510 after that.
That's
which-
what it is. I had 510. Okay, so then I have to add the 490. So I had 1,000 again. So the 40,000 divided by 1,000 is $40. So that's where the average comes from. So now when I sell, I'm using the $40, not the 3904.
And then you do the 380 times the $40 to get your remaining ending balance.
That's right.
That's
Okay.
right.
Now I understand.
Yep. So you have to do the average as you're going. See, there's no way to get out of it. On the FIFO, LIFO, you can kind of cheat a little bit by looking to say, okay, what's left, you know, in my batch and the ending inventory. Just remember to do the opposite of what, you know, what you would do when you're looking at it from the cost side.
I have a question
That's
also.
sales.
When we take our test, will we be able to use scratch paper to kind of like, okay.
Yeah.
And then also, I know you said we couldn't use, we just had to use a regular, I did use a regular calculator, but could we use just the TI 30 calculator or no?
I don't see why not.
Okay.
Yeah, you just, I mean, basically you just need a basic calculator. That's all I'm saying. You don't have to get anything fancy.
And you said that you were going to allow us to use our notes this time, next test?
No, scratch paper.
Scratch paper.
Okay, so the last one is specific, which I think that y'all comfortable with that. They tell you what's left and then you figure out what the cost is, or if they want to know the cost of goods that were sold, then you want to make sure you figure out the difference and then come up with what was sold. Okay, so that takes care of 3. So number 4, they want to know the sales. So now you have to calculate all the sales, and that's going to be, it is what it is. So you go back to calculate that out. So when they're telling you what's sold, they're telling you 720 units was sold at $75. So you'd multiply those. 620 units sold at $75. Well, they were both sold at 75. So you have 1,340 units sold at $75. So that's your sales. You're just going to calculate it out. 1,340 times 75 to get you 100. What was it? 100. 100,500. So that's all you're doing is calculating that way. So now you have 100,500 as your sales, and that's the same all the way across. And then for the cost of goods, you're just going to go back and look to see what was my ending inventory, and you can calculate it back to figure out, you know, based on what was available. For each one of these, you just deduct it out. So let's see. So you had your cost of goods available was 66,640. And for the first one, it's FIFO. And so my ending inventory is 15,580. All right, my difference is 51,060. And that's my cost of goods sold. So that's what I was saying. You can kind of back into it, or you can figure out your cost the long way if you wanted to, depending on how you want to do it. But this problem walks you through calculating what's available, how many units are available through the month, and how much is the cost of it all. And then depending on the method is how it's going to get costed on the sales side and what's going to be left in ending inventory. So you can go back to your table here and see what was my available cost. Go back to 3 and look to see what the ending inventory is and just deduct it. The difference is what you're going to have as your cost. So when you deduct that, now we know gross profit. Now, remember what I told you earlier, gross profit is just showing the sales less the cost. What else do we have to deduct out of that number?
Expenses?
The operating expenses, and that equals what?
Net income.
Net
Net
income?
income. That's right. Y'all getting it?
Yeah.
Okay, chapter 6. I know a lot of people didn't do chapter 6.